Are we forming the top in Bank Nifty? Bank Nifty had just hit the all-time high of around 44,483, surpassing the previous high of 44,151, which was resisting for quite a few weeks now. Well, if I just look at the structure, it seems that there is a strong distribution going on into the Bank Nifty, and that could lead to a severe downtrend. Welcome to the Fast Profits Daily. I'm Brijesh Bhatia. Well, if I just look at the Nifty, we have seen a huge comeback where Nifty was resisting around 18,200, 300. We are around 18,600 plus levels now, and it's just shy of around 18,887, the all-time high. But Bank Nifty has hit the new all-time high, and this divergence is a first sign of cautious onto the markets. The reason may be the underperformance of IT, the underperformance of Reliance over the banking stocks, HDFC being leading into the markets, and financials have been onto the positive side. But whenever in the historical, when this divergence has happened, it has led to the sign of cautious, probably underperformance of Nifty may continue onto the downside, or probably Bank Nifty may take a pause. But eventually, they will move hand in hand, though there could be a difference into the percentage move. But it has been seen that when the Nifty falls, Bank Nifty joins the momentum. And even we saw in 2020 as well, Bank Nifty has led a faster fall, and Nifty has not been fallen that because IT was holding on to that market at that point in time when the recovery was there. But at current point in time, when markets are trending at around 44,300, 44,400 at all-time high onto the Bank Nifty, I feel a sign of cautious over here, and that onto the charts. I'm not looking at the economic parameters where the US debt ceiling is there. Germany, we have seen the fourth largest economy coming on to with the negative economic scenario over here. But if I just look at the charts, and let me start with the first chart over here on your screen. This is the weekly chart of Bank Nifty, and if I just look at right from the structure of 2020, 2023, and if you look at 2020 Jan, we were near the higher levels. Then we saw a pandemic fall in 2022. We saw a March fall. Global markets were correcting, and so was the India in sync with the global markets. We saw a V-shaped recovery coming into the Bank Nifty, and most of the stocks, even Nifty, we saw a V-shaped recovery coming into the markets. And that V-shaped recovery, if you look at the markings over here, has been up fast and furious. Since then, we saw a slightly higher low structure coming onto the Bank Nifty over here. But yes, it was a mix of markets going higher, looking at the selling pressure onto the downside, markets going higher, looking at the selling pressure onto the downside. And for the previous high at 44,151 into the Bank Nifty, we surpassed with a gap at start of the news FNO series. But yes, if I just look at the structure over here, though we are trending at over here, it seems that there is a lack of momentum or a clear trend, which is a sign of cautious. And if I just look at the fractal, as it is said in technical analysis, history repeats itself. And if I just go on to the second chart over here, look at the chart over here. The history is repeating what we saw in 2008 to 2023. Well, everyone knows what happened in 2008. We saw global markets correcting as well as Indian markets correcting from highs of 2008, 7 December 2008, January. Most of the stocks have made highs around these levels. Even the Nifty and the Bank Nifty made high around these levels, and we saw a sharp fall coming into the markets. And it was a global recession in place. We saw a V-shaped recovery. Though it was not a faster rise what we saw in 2020, but the V-shaped recovery into the 2008 fall towards 2010 end, a V-shaped recovery similar what we are seeing in 2020. Though I'm not looking at the time wise, but look at the structure what is developing over here. Then we saw a fall coming in back in 2011-12. a positive momentum, and that could be the retracement, as I said, and then we saw a slow and steady move over here. Now, what happened in 2013? We made a high, we retraced slightly lower. What we saw in 2022, the highs of 44,151, we retraced lower by a smaller percentage. We made a new high. If you look at the red markings over there, we made a new high in 2013. What we are making right now in 2023, the similar highs 44,151, which has been taken out. At that point in time, the highs were taken out, and look at the fall over there after the high was taken out. It was a few percentage highs, and that probably a few percentage high at current point in time. I'm expecting that probably if this trend go higher, say another 2 to 4 percentage higher, we may see a 45,000 or slightly lower than that, and probably there could be a top in place, and this is if history repeats over here, that could be a fall what we saw in 2013-14. Probably that fall was a severe fall of around 35%. It is not a small percentage fall of 3%, 4%. That fall of severe of around 35%. And if the history repeats, even if we fall by around say 20-25%, probably we may go below 40,000 levels, or only 38,000 to 35,000 levels onto the bank nifty. Looking at the structure over here, looking at the fractal over here, what happened in 2008 to 2013, the history could repeat in back in 2020 to 2023 structure over here. Now if I just look at the second chart, why I believe that this structure could work, look at the RSI at the same time. The RSI is basically the strength which we measure of the trend, and look at the weekly chart. Right in 2013, where the markets have hit the new highs, RSI was forming the lower high, which is a negative divergence as per the indicator. Similarly, back in now 2023, where the prices are making the new highs, we are witnessing a negative divergence over here, indicating that the structure is a very similar. History is repeating itself. As I said, it was 35% fall. uh, Touch wood, it may not be a 35% fall, but I certainly think that there is a distribution going on. The weakness, because generally when the markets trend higher, they continue to rally in a faster pace, and that's what lacking in current point in time. A third and most important chart, why I believe that this is a distribution. So this is a Wyckoff theory, and Richard Wyckoff have defined this theory as accumulation and distribution. And when the distribution generally takes time to distribute, accumulation is similar where it takes time to accumulate the stock, and distribution is a similar manner. It takes time to distribute. Now, if you look at right from, if I just look at the June 2022 low last year, where index was trending somewhere around 32,300, 32,500 levels, we saw a rally towards 41,800, and I'm marking it as a buying climax. So if you look at, if you just go onto the internet and type Wyckoff distribution, you'll get the whole phase on whole structure, how this distribution happens. So the first leg is 32,300, the lows were around 30,300 to 41,800. It is a buying climax. Then we saw a preliminary selling coming into the price action. Now this preliminary selling is not a small number. It was a 10% fall onto the bank nifty, and 10% fall onto the index, onto the bank nifty, which is a broader or the benchmark index for the banks. It certainly puts pressure onto the overall Indian markets as well. Now if you look at, the fall was from 41,800 to around 37,400, nearly 10% fall, which was in a span of 15 days, or around 2 weeks. So I get mid of September 2022 to end of September 2022, we saw this 10% fall into the bank nifty. This is fast and furious. Prices came back again very strongly. There was a bulls which were fighting against those fast and furious bears, and the rally slow and steady for a quarter, probably start of October to the end of December 2022. In a quarter time frame, we saw 37,400 to Nifty testing the all-time high, hitting the all-time high of 44,151. Again, start of 2023, we all know Indian markets which was outperforming in 2022, witness a divergence of underperformance against the global markets, and most of the stocks into first quarter of the 2023 into the Indian markets have seen a downside. So was the bank Nifty. We saw right from around 44,000, 44,150 to around 39,000 levels, and then we are back in May now, where markets have hit the new all-time high 44,483, and I term this as a fake out. As I said, the reason to call this fake out was, again, as I said, history is repeating itself. There is a negative divergence coming on. And if I just look at the constituents over here, HDFC being 27% weights, ICICI Bank with 23% weights, Kotak Bank with around 12% weights, SBI 11 and Axis 11. So these are the top five stock with around double digit weights. And if I just look at HDFC's way lower from its all-time high, SBI lower from its all-time high, Axis Bank slightly lower from its all-time high, ICICI Bank lower from the all-time high. Only Kotak, which is slightly trending around the all-time highs. But if I just look at these four components with around, if I just sum up, it would come around 65-70%. They are slightly trending around below their all-time highs, and that could be the one divergence which I think will play out into the bank Nifty as well. And if slight negative news, or probably the Nifty slightly corrects by another say 300-400 points, we may see bank Nifty profit booking coming into the bank Nifty at the higher levels, and probably we may see short buildups building up into the future space, because all these five banks which I have highlighted are trending into the futures as well. So there could be a possible short buildups coming on around those levels into the futures basket of these stocks. So keep a watch on this. If these play out, I probably think say another couple of percent plus minus onto the higher levels. But I think this rally will fizzle out, and I am terming this as a fake out over here. And if we just play out, we may see probably the break of 38-39,000 levels, and markets may even go lower onto the bank Nifty. Just keep a watch onto the fake out structure, and if in case what could go wrong over here, if HDFC continue to rally above the all-time high, ICICI Bank continue to rally above the all-time high, Axis Bank continue to rally above the all-time highs, there could be a chance where bank Nifty structure may fail out. But as of now, I think the structure is playing out as of now into the fake out zone. Sooner or later, if it doesn't sustain, we may see a faster fall coming into the bank Nifty as well. So keep a watch, and I'm not looking for a day or for a week or for a month. I'm looking for a 2 to 3 months view over here, where bank Nifty can see a downside momentum. So signing off, Brijesh Bhatia.